Good afternoon, students. Welcome to the Analyst, dated 26th of December 2023. Today we'll look at 5 important articles from the Indian Express and the Hindu. The first article will be regarding disinvestments. Then we'll look into oil economics. Then we'll look into judicial appointments. And then we'll look at the Monetary Policy Committee. And lastly, we'll look at the map of Gaza. Let's start with the first article. So here the center is likely to miss its disinvestment targets in 2024 again. Now, a related question can be, what is the primary objective of disinvestment in the context of public sector enterprises in India? And jot down whatever the answer you think is right in the comments below. Now, let's understand. Let's say there is a company called SBI, the State Bank of India. Now, in State Bank of India, Government of India owns, let's say, 60% of the total shares. Whatever shares are, so 60% of the shares is with Government of India. So, it naturally becomes a public sector bank. It becomes a bank which is owned by the Government of India. The opposite can be a private sector bank, let's say ICICI, Kotak Mahindra or HDFC. Now, let's say SBI now owns a smaller company. SBI has now 60% shares of another smaller company. So can I say this company will also become a public sector undertaking? Let's say there is a smaller company which is not doing well. So SBI buys the share of this company to support it. So this company also becomes a Government of India company. So all the entities of Government of India, all the corporations of Government of India and their holdings together, they amount for more than 32 lakh crore. 32 lakh crore of assets. And these asset class are mostly in holdings in different companies. Companies like Coal India, companies like NLC, the Navily Lignite company. So these kind of companies, who is the majority shareholder? It is the Government of India. Now, from time to time, the government would require some money. So, let's say the Government of India has invested some monies in a entity for, let's say, 20 years. And over the period of time, this entity has done well. So now is the time that the Government of India wants to reap the benefit of this growth and wants to sell part of this asset. Why it wants to sell part of this asset? Because after selling, it will get some money, and this money may be used to, let's say, buy some new asset. Or let's say invest in new assets. The way, let's say, we get a property and that property price appreciates, and then we sell off that property to make some capital gains. And out of that capital gains, maybe you will invest in a business or you will invest in another enterprise of yours. So similarly, money is important for the government also. Now, over the period of time, what we are looking at is that we are facing with the fiscal deficit as well as, let's say, revenue shortages. So let's say I have new burdens, like I want to give more pension, or let's say now my salaries, they have increased, or let's say I want to go for capex, that is capital expenditure. In all such cases, government requires some money to spend. So one method of tapping into new reserves or to get some extra cash is through disinvestment. Disinvestment is nothing but selling of your part ownership. Now, let's say there is a company in which like HDFC. So HDFC is a private company. It is not a government company, right? Its shares are publicly traded, yes. But what about SBI? So SBI is a Government of India enterprise. Now, today, let's say we have majority shareholding in SBI. Now, over the period of time, let's say the government starts to sell the shares. So there might be a time when the overall shares are below 50%. So now, what will I say? Have I privatized this body? So in one body, I have 60% share. So can I say I own majority of the company, okay, as Government of India. Now I have 51%. Again, I have majority. What happens when I have 49% ownership? Government of India has 49% ownership in a company. Is it in minority? Yes. But has it transferred the ownership? Not yet. Maybe not. So when I am selling my shares from, let's say, 70% ownership to 60% to 51% to 49%, I am essentially doing what? I am selling the assets, getting the money. This is nothing but disinvestment. Now, when does this lead to privatization? When I, along with sale of shares or ownership, I am transferring this ownership to a private party or another party which is not government. So let's say I sell my stakes, 20% stakes, and I make a Marek investor, let's say investors like BlackRock, some private equity investor, as the owner of the company as well as the owner of the company as well as the promoter of the company, then I will say my disinvestment has led to privatization. Now, when you look at what kind of stakes Government of India has, this 32 lakh crore rupees which the president owns through various companies like SBI, through LIC, through Stuti. So all these companies are nothing but the LIC of India, the SBI of India, ONGC, NTPC, Coal India. Who is the sole proprietor? Who is the majority owner of these companies? It is the Government of India. Now, let's say over the period of time through investments, the LIC has earned a good dividend, a good amount of profit. So LIC will give Government of India dividend. Why? Why? Because let's say I make 100 rupees. Next year I am making 200 rupees. Next year I am making 300 rupees. So I should also share the profit that I am making with my shareholders. Now, who is the shareholder in SBI? Who is the majority shareholder? So you can also own a share of SBI. But who owns the majority share? It is the Government of India. So if SBI does well, if it is distributing dividend, the Government of India will get some dividend out of it. Similarly, LIC will give some, ONGC, NTPC, Coal India, all of them will give some amount of dividend, some amount of sharing of profit to its shareholders. And who is the shareholder? Who is the majority shareholder? It is the Government of India. So over the period of time, through dividend transfers, these companies are already giving money to the government. But when I am saying I am going for disinvestment, I am essentially saying I am selling the shares also. If I sell, let's say, 2% of the shares, I will not get any more dividend on that shares. So I bought the share at 50 rupees, it went to 200 rupees, I sold all these shares. So now I don't have the share, I have got my capital back. So this is why the Government of India would go for disinvestment. Now, what are the primary reasons? What are the primary reasons for such disinvestment? One is a core principle that the government of India does not want to remain in active business. So, the objective of government is to govern and to provide all the goods and services, the necessary goods and services to its citizen as a welfare state. Now, under such circumstances, as such, prima facie, the government should not be involved in active business. But what if there is a condition where there are no businesses, but there is a need in the economy? So then the government will step in with creation of public sector undertakings. But what if now it is a fair competitive market where private players want to enter a particular sector? Then the government can have, let's say, can withdraw from that sector or give it to private players or not be very active in the business and maybe transfer or maybe go for more freedom in terms of management of such businesses. So when we are talking about Navratna companies, Maharatna companies, gradually we'll see what? That with liberalization, privatization, what we have seen, that more and more autonomy has been given to PSUs. A lot of them have been privatized, they have been sold. A lot of them, the ownership, the stake has been decreased over the period of time. That is happening. But more so, today, why do we need the money? Is it because of better management only? The answer is no. It is because we want more money coming out of these, the appreciated values of these shares and the money that we get. So the 50 rupee share, which now has become 200 rupees, it unlocks a lot of capital for government, and the government lacks the fiscal resource. Why? Because we have fiscal deficit. We have taken a lot of loans, international loans, domestic loans from the bond markets, right? And we have to service these loans. Secondly, we have a large forego going towards our revenue expenditure in forms of salaries, in form of, let's say, your pensions. Then, at times, Government of India also wants to open up sector. Let's take an example of coal. So in coal, we have two very big players, and these players are government owned. One is Coal India. So Coal India, through its subsidiaries, will have a monopoly in the market of coal mining. So will it not prohibit the private players from entering this market? Does it not create a sectoral barrier for private players to invest in this market? So a monopolistic design. Then you have the Navally Lignite Company, again NLC, again involved in lignite mining. So all these kind of companies, will it create some barriers for other sectors? So let's take the example of power sector. In the power sector, the NTPC is a household name. So NTPC today now faces competition, and fair competition from private players also. So the sector has opened up to a lot of private players. Why? Because India needs to double its production of power in the next 10 years. And that is also our demand for our green energy transition, for our Panchamrita goals, that we are expecting that from 400 gigawatt, it will go to 800 gigawatt. So who will bring this growth in terms of power production? The PSUs alone cannot contribute to such a growth. That means there is a need of private sector participation. There is a need, there is a space for entrepreneurship also. So a lot of sectors will be thrown open for private participation. Yet there will be some sectors where there will be more monopoly coming in, some strategic sectors. Can we take the example of defense? Can I say that the Hindustan Aeronautics Limited, Bharat Electronics Limited, the Garden Reach Shipbuilders, then the Mazgaon Dock Limited, such companies are nothing but they are government companies with more than 80% ownership of the government, and they are involved in making Indian defense industry Atmanirbhar. So can I say in these sectors government need to spend more? On the other hand, can we say that there will be some sectors where the private parties can now take the baton of growth? For example, power. So the government is also reshuffling its asset. It has some money and it will shuffle its money from, let's say, withdraw some money from power sector and put the same money in, let's say, exploration of critical minerals, in, let's say, defense sector, in, let's say, aerospace. So these kind of strategic maneuvers are happening all the time. Now, over the period of time, how it has evolved is that there was forceful disinvestment. Forceful disinvestment in 1990s, 1991. Why? Because whenever a BOP crisis is there, a lot of restrictions are forced from the Bretton Woods organizations like World Bank. Now, but over the period of time, it has become extremely systemized with the creation of DIPAM. So, Department of Investment and Public Asset Management, DIPAM, this is under the Ministry of Finance only. And earlier, an entire ministry was created, which was later nullified. So now DIPAM handles all the all the disinvestment decisions of Government of India. Now, how does it help? So it helps in terms of covering the fiscal deficits, covering, let's say, we want to invest in the economy, we want to invest in new sectors, then it can be beneficial for long-term growth because I am shifting the capital from one sector to another sector. Let's say today my investments were in coal, in thermal energy. Can I shift now my investments into green energy, into clean energy, into solar, into wind? So Government of India also wants to give a direction, and through this allocation of money, it can direct the economy in which direction, in what particular skew the economy wants to move. Then it encourages private ownership of assets. Now let's take an example. Let's say there is a government land, and on top of that there is a large industry, and this government land and this large industry is by any chance situated in the South Delhi, or let's say South Mumbai. Now it might happen that this industry has gone defunct. The particular industrial setup might have grown defunct, but the land parcel, the cost of the land parcel itself has grown by 8,000 times. So is it not ideal to unlock those assets? And is it not ideal to share these assets by getting some money from the people? So how these companies are raising the money from the people? By going for IPO. So they are going for IPO. Recently, IREDA went for an IPO. So they will go for an IPO, raise some money from the people and share the ownership with the people. So this will help them in terms of A, financing, B, I will share some of the ownership with the people. And whenever the company is doing well, company is growing well, the dividends is shared, the growth is shared with everyone through the price of asset appreciation as well as dividend. So we need private partnership, we need private ownership of not only the investors but also private equity players. Let's say more than $100 billion funds, pension funds who wants to own some assets, who wants to fund a particular sector. Let's say some green fund, they want to have a particular stake in the Indian growth story and particularly in green energy. So if they invest into IREDA, if they invest into, let's say, SECI or any such government enterprise, let's say NTPC itself, let's say they take a minority stake of 1%, 2% in such a company, can I say that this unlocks a lot of potential in government companies also? And it gives a lot of money to these government companies also. Now, what are the criticism pertaining to this? So, can I say that if to foot my rent and if to foot the salary of my employee, we have to sell the family silver. That is poor economics, right? If we are, let's say, selling our core assets and then using the money that is coming from there to, let's say, fund some freebies or go for salary payment or go for pension payment, is it not a bad allocation of money? On the other hand, the alternative can be that when you are selling this family silver, reinvest it. Reinvest it where? In some new sectors, in sectors which need capital, which are capital starved. So that is the biggest criticism that comes from disinvestment. That a lot of unlocked sectors, a lot of sectors which were not open, they have multiplied more than 100 times, 200 times the moment these assets were sold to private sectors, the moment they were privatized. But the government could not unlock the same potential from the same company, from the same industry. Is it not selling your assets at a discount? And that too at a discounted rate, and finally to use the proceeds of the same money into, let's say, paying off revenue expenditure, paying off salaries and pension. So that is a criticism. And there is no clear model which is there. There is no clear model as to how the disinvestment is happening. Is it because of the budgetary needs, or is it because of good financial decision? Now, it might happen that I need 50,000 crores this month for my budgetary allocation. But this is not the right time, let's say, in the economy to sell a particular company, or to sell, let's say, 2% or 3% in a big company like, let's say, SBI or LIC. It is not a good time to raise funds from the market. So should I time my decision on the basis of need only, need of revenue expenditure, or on the basis of sound financial decisions? So that is the biggest criticism. Let's look at the second article. India's Russian crude import averted havoc in global oil markets. Now we are essentially referring to the condition where India was starting to import a lot of oil from Russia and cut its dependence on OPEC and OPEC plus countries. More so, we have been diversifying our imports from the Middle East. And this is also happening parallel to the sanctions which were hitting the Russian oil markets because of the Russia-Ukraine crisis. Now, in this perspective, there is a previous year question that you can look at. The term West Texas Intermediate, sometimes found in news, refers to a grade of A, crude oil, then a bullion, that means we are referring to what? Gold, then rare earth elements, and the uranium. Write your answer in the comments. Now, let's understand who are the world's biggest oil producers. So, at top is the United States, followed by Saudi Arabia. Then we have Russia, Canada, Iraq, China, UAE, Iran. So, majority of the oil was coming from some large conglomerates like British Petroleum, Shell Oil, Exxon Mobil, until the same companies started to explore the Arabian Peninsula. Once the Persian Gulf and Arabian Peninsula was exploited, came the Aramco. And after creation of this Aramco and later on creation of the OPEC, gradually the power of pricing as well as the power of supplying oil passed to the Middle Eastern countries. And these Middle Eastern countries, they created what we know as OPEC, and which operates as a cartel, and which also operates as a cartel in form of, let's say, what should be the production, what should be the volume of production. So how many barrels are to be produced, how many million barrels are to be produced, then what is the pricing that should be done. For example, they impose something called as the Asian premium on the Asian countries. So they have production power, they have pricing power. Then they also operate as a block in terms of negotiations with other countries. Other countries, A, which kind of countries? Other countries which are petroleum producing countries, and the other countries which are petroleum buying countries. Now, when we look at the oil import trends, what do we see? We see that the oil import trends are following the growth trends. So we see that over the period of time, the demand of US has increased. But simultaneously, if you see that US has also gone through a revolution of shale oil. So now, even though it imports a lot of oil, it is the largest producer of oil also. Simultaneously, what do we see? We see that countries which are stagnating in their growth, like Japan, their production, their demand of imports is decreasing. On the other hand, if you see the growth-oriented countries like China and India, the steepest demand of oil are from these countries, and unfortunately the reserves are distributed across the world. That means there is a mismatch between the producers and the consumers. Now, which are the countries which have the biggest appetite for oil? So the top is again the United States. So whenever we are looking at, let's say, debates of climate change, so we usually refer the word as common but differentiated responsibility. Now, US and the Western European countries, they have consumed oil, they have consumed coal in the same pace for last 200 years. And the trend that we see in China or let's say India, the trend is only the growth of last 30 to 40 odd years. But these countries, they have been consuming these carbon rich sources of energy for last 100 to 100 years. So today also the largest carbon footprint comes from United States and the second one would come from Europe. Then comes China. China, because China has grown its GDP to the size of more than $12 trillion. Then you have India, then you have Saudi Arabia, Russia, Japan. Now, when we are looking at the largest oil reserves by country, then we see a country in South America, that is Venezuela, which has the highest oil reserves in the world. Then comes Saudi Arabia, followed by other countries. And so, geographically, if you are looking at the map, you see that the two countries which demand the most amount of oil, they are not in the map. On the other hand, you see a dominance of countries like countries which are located in the Middle East. One, B, Russia. C, the US and Canada combined. And D, Venezuela. Now, usually what happens, we have some sanctions on Iran, we have some sanctions on Venezuela, on, let's say, Russia. So this affects the oil supply also. At times, there will be an oil glut. Let's say the sanctions are removed. So what will happen? Iranian oil will enter the market, Venezuelan oil will enter the market, Russian oil will enter the market. So there will be oversupply. On the other hand, when there are sanctions, then what will happen? Oil shortage. In shortage, what will happen? In shortage, there will be inflation. So what India did, India started to diversify. India started to diversify its oil imports. How come? In terms of geography. So earlier, India's focus was more towards the Middle East. But with the Russia-Ukraine crisis, India started to focus on Russia. Why? Because it was getting a discounted oil. And what India also did is that it got a lot of oil from Russia. It processed this oil or refined this oil and then exported this oil back to Western Europe. And this particular business model is referred as laundromat by the Western media. Why? Because they have imposed sanctions on Russia. They are not getting the energy supplies from Russia directly. Instead, India is buying and then selling it after some value addition to again Western Europe. So this is how India has diversified. Secondly, India has also changed in terms of the countries. So focus earlier was on Middle East. So that focus has been diversified within Middle East also. Then moving away from Middle East also. In form of Russia, Venezuela. Then moving towards new forms of energy. For example, the idea of biofuel. Then going for more value addition. Value addition in form of let's say petroleum products. Now India is also trying for rupee based payments in terms of oil imports, which has not bowed down well, but very soon it will also pick up. Now, in terms of locations, you can see some of the oil majors. So you have Petroleas Mexicanos, you have ExxonMobil in the US, you have BP, which is British Petroleum, you have Rosneft and Gazprom. These are nothing but they are Russian PSUs. Then you have Shell Oil, you have Kuwait Petro, and you have the largest company of the world, the Saudi Aramco. Now, in this map, again, you will see that the top consumers and the most aspirational consumers. So, where will the next line of growth come from in terms of oil? So, oil will grow parallelly to the growth of economy. Oil demand cannot suddenly increase without the growth in the economy. So, where do we see the next growth of oil demand? That will be in emerging markets, that will be in developing countries. And among the emerging market, who are the larger economies? So they are China and India. So that is why what do we see? That even though we are the biggest consumers of oil and gas, but we have very little to play in the oil and gas supply chain. We have very little value to add, and most of it, what we are importing, we are exporting with minor value addition. And therefore, there is a requirement of strategic investment in terms of collaboration of larger companies of India like the Reliance Industries along with larger larger companies of Middle East like Aramco, like Saudi Aramco. Now, the recent import trends that we have seen is that there is increase in Russian share, and now 40% of our oil has come this year from Russia. And if you combine it with, let's say, Azerbaijan, Kazakhstan, it comes to be 43%. Then there is shift from Middle East to Russia, and there is also this brazen violation of sanctions. Why? Because of our energy security needs. Energy security is very important for the growth of the economy as well as for inflation. And inflation control is very important because a country has come out of the shock waves of COVID, and therefore inflation targeting is important for the people of India. Then the Middle East supply challenges, they will remain, whether it is the Russia-Ukraine crisis, whether it is going through let's say Persian Gulf, or let's say Red Sea, or looking at the Israel-Palestine issue. There will be larger players who will be creating some trouble in the Middle Eastern supply chain. And because of this Middle Eastern supply chain and the presence of OPEC and the opaqueness of OPEC, gives India the opportunity or makes India move towards newer directions in terms of diversification of energy. And over the period of time, India has also contemplated the issue, the protesting against the Asian premium, which is some extra payment that countries in Asia will have to pay on the oil that is coming from the Middle East. Now, what is the way forward? The way forward is to diversify the geography. Geography in terms of move from Middle East to, let's say, South America, to North America, to other areas of oil, to nearby regions as well as distant regions, but not to directly focus on Middle East, and to hedge our bets in terms of oil imports. Then to diversify countries also, not a single country should not have a very large percentage of import. So we utilize the Russia-Ukraine crisis as an opportunity. But if we continuously depend on a single country for, let's say, 20-25% of the oil imports, it also builds some kind of higher risk on if anything untoward happens in that country. Then we have to process and value add, and we have to become part of the global supply chain of oil and oil trade. This also requires massive investment into our ports and massive investment into strategic petroleum reserves and building pipelines, oil pipelines, increasing refining capacity, and to diversify energy itself, and to move from, let's say, move towards, let's say, biofuel, to move towards, let's say, ethanol blending, to move towards, let's say, flex engines, and then the idea of green shift of energy. As much as possible, our electricity grids, our entire energy needs should move towards electricity, and that part of that energy that is coming from electricity can also be sourced from sources like wind and solar energy. Let's look at judicial appointments. Now, these were the parting words from Justice Call, that the court can't be placed to politically handle the government. The court can't be the opposition. And this was given in perspective of the NJAC judgment and how judges were to be appointed. And this pertains to your GS2 constitution. Now, when we are looking at judiciary, judiciary is one of the three organs of the state. And there is a separation of power between these three organs of the state. Now, the separation of power is not watertight. Rather, it is more about collaboration. And it is also about checks and balance. It is also about the doctrine of checks and balance. Now, the judiciary has the role of adjudication to tell us if there are two parties who are contesting a particular issue. The judiciary will take the decision whether one is right or one is wrong. Then it is also the final interpreter of a law of our constitution also. So multiple roles the judiciary plays, which are fundamental to the good governance of this country. That also means that the people who are at the helm of affairs should also be independent. They should be independently appointed, and they are taking decisions without fear and favor. That tells us that the process of appointment must also be more fair and be less opaque in that terms. Now, the judiciary is also the final interpreter of the constitution and the defender of civil liberties, and also plays the role of guardian of the Indian constitution. And it usually checks and balances the other two parts of the state, that is the legislature as well as the executive. Whenever either of the bodies or both of the bodies would try to usurp some power and to get into, let's say, uncharted territories. Now, how are judges being appointed? So, Article 124 talks about the appointment of judges in the Supreme Court, and Article 217, it talks about the appointment of the judges of the High Court. Now, in both the condition, the president will take the decision on the basis of consultation of such judges. And if you read the word, so such judges of the High Courts and the Supreme Court as the president may deem necessary. And whenever we are talking about the president, we mean to say the top of the executive. So president is the head of the executive. So that means the constitution makers made it very clear that the executive will have a role in the appointment of judges. But over the period of time, through judicial appointment, what has happened is that today, as we speak, the judiciary decides, and the judiciary has almost majority of decision-making power of who to make a judge, who to appoint a judge. Now, this starts because of the SP Gupta case. This is also referred as the first judge's case. Now, here the word in terms of consultation, the interpretation of the word consultation was sought after. Now, here the court held that consultation in the process of appointing judges does not require concurrence. That means, let's say these are judicial parties and this is the executive party. So, the executive party will seek some consultation. It does not mean that the executive must hear what the judiciary is saying. So this was the first interpretation. This interpretation changed in the second judge's case, and this is called the Supreme Court Advocate on Record Association, and in short it is also written as SCAORA versus Union of India. So this is the second judge's case. Here the word consultation became concurrence. That means now the executive will have to listen what the judiciary is saying. But who will tell the executive? So it was a new body was created. And this was a judicial innovation. This body was called a collegium, and this body was a three-membered body. So the Chief Justice of India, along with two other senior most judges, they were to tell the executive that this particular judge seems good, and the executive will have to abide by what the judiciary has suggested. Now, in the third judge's case, there was more modification. This three member collegium, it became a 5-member collegium. So 4 plus 1. So 4 senior most and the Chief Justice of India. Now, after this, what happened is that the overall, when you see from the first judge's case, the participation of the executive is gradually declined in terms of consultation, in terms of any discussion with the executive per se. And then what happened, with a constitutional amendment through Article 368 of the Indian Constitution, and with the concurrence of the states, because the amendment was in federal principles. So the NJAC, or the National Judicial Appointment Commission Act, was brought. Now this act created a body called NJAC, which will then determine the appointment of judges. Now the issue was that the participation of NJAC was partly from executive and partly from judiciary. Now this act was struck down by the Supreme Court, as it was held that it is a violation of the basic structure. And why it is a violation of the basic structure? Because it affects judicial autonomy. It affects the decision-making powers of the judiciary. So again, we returned back to the collegium era. Why? Because the new act was nullified. But the Supreme Court held that we will arrange for a new memorandum of procedure between the two parties of how the appointment will happen between the courts and the executive. And then there are issues which are still pending related to the memorandum of procedures. Now, there are some issues with this judicial appointment. A is that we see in India that there are a lot of judicial delays, there is a lot of judicial pendency. More than 60,000-70,000 odd cases are pending before the Supreme Court itself. Then you see that a lot of times there are issues in transfer of judges, and it has been called as arbitrary by many judges who have been transferred as a punishment posting towards the northeast. Then we see that the constitutional benches, they are seldom used. The higher courts, particularly the Supreme Court, is now giving less time to constitutional issues and are mostly involved in special leave petitions, SLPs, under Article 136. Now, it is also, this principle of judges appointing judges is also against the principle of doctrine of separation of power and against the principle of natural justice. It is like I be the arbiter, I am adjudicating my own case, I am deciding my own case. It is like a father appointing a son, it is like a club appointing another club, it is like a family appointing another family of judges. So because of this, what criticism has come is that there is a lot, or there are more than 50-60 odd families where the concentration of power in terms of judicial appointment has happened, and therefore you have a lot of brother judges, you have a lot of son judges which are coming into the higher judiciary. One more issue is that there is lack of appointment of judges from, let's say, academics, the way it happens in the United States, the way famous jurists, legal scholars, they are picked up and they are made judges. So that is also not happening. Then there are very few selections from the bar. That means very few lawyers are getting elevated to the bench. Then there is allegations of nepotism, and it is also like the judiciary wants to maintain the collegium system and uses the basic structure as a legal veto against any such reforms. Now, when we look at the appointments elsewhere, we see that in the US, judges of the federal court are appointed by the president with the advice and consent of the Senate. That means other wings of the state are also involved. Again, in the UK, you have the independent JAC, the Judicial Appointment Commission, the way we were contemplating a NJAC. Now, what is the way forward? We have to reform the memorandum of procedure, and we need to diversify in terms of picking up more women, increasing the representation of women in judiciary, and then going for transparency in terms of releasing the minutes of meetings of collegium and to tell all the opinions of the collegium in writing. Then the Law Commission has recommended that there should be an equal role for the judiciary and the executive in the selection and appointment of judges to the higher courts and the Supreme Courts. Now, most importantly, the NCRWC under Justice Venkatachalaya, it recommended again a National Judicial Commission with 5 members, that is the CJI, 2 senior most judges, that means you have a majority of the judiciary, and then the Minister of Law and Justice, and 1 eminent person. So that means a structure of 3 plus 2, so that 1 eminent person and the executive have a say in the decision making. And what can be a good conclusion? That a system having checks and balances, transparency coupled with confidentiality, objective criteria needs to be in place rather than the opaque collegium system. Let's look at the Monetary Policy Committee. Now, a Monetary Policy Committee member suggests need for a rate cut. Now, this is again in the perspective that the Fed chairman Jeremy Powell hinted for 3 successive rate cuts in the upcoming year. So now the talk has gone ripe also in India that do we need a rate cut to decrease the effective interest rates so as to spur more growth in the economy. Now, the Monetary Policy Committee was established under the amended RBI Act, the RBI Act of 1934, which was amended in 2016, and its section 45ZB, it talks of MPC. Now, this MPC is a 6-member bodies, and the idea is that it will go for inflation targeting. So, inflation control is the primary work, and the sweet spot is 4%, and the tolerance band is plus 2% and minus 2%. That means we can see a lower band of 2% of inflation or a higher band of 6%. So within this limit, the MPC has to take all the decisions to ensure that there is a suitable inflation bracket. Now, the decision of the Monetary Policy Committee is binding on the Reserve Bank of India, and directly the decisions are primarily taken regarding the repo rates, which affects directly the interest rates. Now, what is the composition? So, you will have the RBI governor who will be the ex officio chairman. Then you will have the deputy governor of monetary policy, and this person will be responsible for monetary policy matters. Then there will be nominee of the central board, an officer of the bank nominated by the central board of RBI itself. And then there will be 3 members. So 3 plus 3 arrangement, where 3 coming from the banking sector from the RBI itself and 3 coming from the government, to ensure that both of them, that is the regulator as well as the executive, they are in tandem in terms of inflation targeting. Let's look at a place in news, that is Gaza. Now, such questions become extremely important even if UPSC is not going to ask, let's say, what is happening in Gaza or what is happening in Russia, Ukraine, but indirect questions as well as map questions can come from these areas. Now, if you look at the larger map where the merger of Africa with Middle East happens, you'll see this Sinai Peninsula. This is nothing but Sinai Peninsula, and here you have Gulf of Aqaba. And this Gulf of Aqaba will give us the way to Israel. So Israel, Jordan will access the Red Sea through the Gulf of Aqaba. On the other hand, all these shipping containers, they will move from, let's say, the Red Sea to the Mediterranean Sea from here, because here you have the Suez Canal. Now, if you look at Israel, so Israel is surrounded on one side by the Mediterranean Sea, and at the edge where you have the Gulf of Aqaba, it is able to access the Red Sea also, right? Now, within Israel, there is a place called Gaza Strip, and this Gaza Strip shares its border with Egypt. So Egypt on one side and the other side Israel, and on one side Mediterranean Sea. So Mediterranean Sea, Israel, and here you have Egypt. And what part of Egypt? The Sinai Peninsula. Now, because of security reasons, what all the countries they have done, in the Mediterranean Sea, there will be surveillance, there will be absolute naval blockade kept by Israel for its own security. On the other hand, the land borders, they are extremely surveilled. So now what happens is that a lot of goods, and Egypt has also closed its border with Gaza, but a lot of goods will be smuggled into Gaza through these holes which are created, which are digged holes through this route. So whatever supplies is coming to Gaza is coming through the Egyptian route. Now, let's look at Gaza. So it is located in Eastern Mediterranean Sea. It borders Egypt and Israel, and there are 2 million residents, that is 20 lakh people are living there, and it is open air prison. Then with the 6-day war in 1967, Israel captured Gaza from Egypt, and then Israel withdrew its settlements from Gaza in 2005. So Israel has essentially closed the Gaza from all sides, and it has left Gaza. Then in 2007, there was rise of Hamas in Gaza, who are essentially now in de facto control. Then Israel, Egypt have imposed a permanent blockade, and Gaza is enclosed by walls on 3 sides with its western border controlled by Israel, limiting access to sea. And this creates not only a humanitarian crisis but also a very good smuggling route through this area. And whenever there is any conflict in the Gaza Strip, people as well as goods, they move to and fro through this area. And this has been the route through which the missiles have been supplied to the people, to the residents living in Gaza who attacked or who are essentially attacking the Israeli settlements. Thank you so much. I hope it helped.